In the heartland of America, amidst the quiet plains of Omaha, Nebraska, a story of quiet determination and profound wisdom was being written. This isn't a tale of Silicon Valley disruption or overnight riches. It's the journey of a man who, with little more than patience, principle, and an unshakable belief in American ingenuity, built an empire from the ground up, becoming one of the most respected and successful investors in history. This is the story of Warren Buffett, a man who taught the world that the surest path to success isn't always the fastest, but the one built on a foundation of value, integrity, and a deep understanding of the human spirit. Warren Edward Buffett was born in 1930 on the cusp of the Great Depression. It's a time that would indelibly shape his perspective on money, risk, and security. Unlike many of the tech titans who would follow him, his ascent was not fueled by code or algorithms, but by a relentless curiosity and a profound grasp of fundamental business principles. His journey wasn't a sprint, it was a masterclass in the marathon of value investing. From his earliest days, a fire of enterprise burned within him. This wasn't just a child's game, it was the dawning of a financial prodigy. At the tender age of 6, while other children were playing, young Warren was already a businessman. He went door to door selling sticks of chewing gum, then cases of Coca-Cola, learning his first lessons in profit margins and customer demand. He delivered newspapers, not just for pocket money, but to understand roots, efficiency, and the power of a recurring revenue stream. He saw opportunities everywhere, turning a simple pinball machine into a small network of arcade games placed in local barbershops, and even renting out his family's homemade miniature golf course. Each small venture was a real-world classroom, teaching him more about capital allocation and return on investment than any textbook ever could. This innate drive was soon fortified by a formal education that would crystallize his burgeoning philosophies. He began his higher education at the University of Pennsylvania's prestigious Wharton School, but felt a disconnect. He found that the academic theories being taught were detached from the practical, real-world business sense he had already cultivated. Seeking a deeper, more grounded wisdom, he transferred to the University of Nebraska. Upon discovering that Benjamin Graham, the legendary author of The Intelligent Investor, was teaching at Columbia Business School, Buffett knew he had found his mentor. He applied and was accepted, a pivotal moment in his life. At Columbia, under Graham's tutelage, he absorbed the foundational principles of value investing. The concept of Mr. Market, the importance of a margin of safety, and the discipline of buying securities for less than their intrinsic worth. After graduating with a master's in economics, he didn't rush to Wall Street. Instead, he worked for his mentor's firm, Graham Newman Corp. Here, he wasn't just a student anymore. He was a practitioner, honing his skills, meticulously analyzing company balance sheets, and learning to spot diamonds in the rough, solid, dependable businesses that the market had foolishly overlooked. Armed with this powerful knowledge and a few years of hands-on experience, Buffett returned to Omaha to start his own investment partnership. But his true empire began to take shape with a company that, to anyone else, looked like a relic of a bygone era. In 1962, he began to notice a peculiar pattern in the stock of Berkshire Hathaway, a struggling textile manufacturing company in New Bedford, Massachusetts. The company was in terminal decline, closing mills and selling off assets, yet its stock price would tick up every time it did. Buffett began buying shares, seeing it as a classic cigar, but investment a discarded business with one last free puff in it. However, a dispute with the company's management led him to a fateful decision. Instead of just taking his small profit, he bought a controlling stake, a move born of frustration that would inadvertently become the single greatest investment of his life. He soon realized the textile business was a dead end, a relentless drain on capital. It was here that his genius pivoted. He didn't try to save the failing mills. Instead, he started using the company's small but steady cash flow as a vehicle to invest in other, better businesses. This was the birth of the Berkshire Hathaway we know today. Buffett transformed the failing textile company into a holding company, a fortress of financial strength, and a launching pad for his investment philosophy. He began to move beyond just buying stocks. He started buying entire companies. He wasn't looking for a quick flip. He was looking for partners for businesses he could own forever. His strategy was simple but profound. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. He looked for businesses with what he famously called a moat, a sustainable competitive advantage that protects them from competitors. Like a strong brand, a dominant market position, or a low-cost production model. He began acquiring a diverse portfolio of American institutions, from the reliable cash flow of CS Candies and the underwriting genius of Geico Insurance to the industrial might of BNSF, Railway, and the sweet nostalgic appeal of Dairy Queen. Each acquisition wasn't just a financial transaction. It was a vote of confidence in a company's management, its culture, and its enduring place in the American economy. He was building a conglomerate that was a microcosm of America itself, diverse, resilient, and built for the long haul. The philosophy that guided this spectacular success is one that has been admired, studied, and emulated by millions around the world. Yet its power lies in its almost deceptive simplicity. At its core is an unwavering commitment to long-term investing. In a world obsessed with quarterly earnings and minute-by-minute market swings, Buffett plays a different game. He is famous for his favorite holding period forever. He invests in businesses, not tickers, and once he buys, he is content to hold for decades, allowing the power of compounding to work its magic. This approach is underpinned by another of his ironclad rules: never invest in a business you cannot understand. He famously sidestepped the dot-com bubble of the late 90s, not out of fear, but because he admitted he didn't understand the business models of many high-flying tech companies. He stuck to what he knew: insurance, railroads, banking, and consumer goods, the bedrock of the economy. This discipline is coupled with an almost superhuman patience. Buffett is a master of inaction, content to sit on a mountain of cash, sometimes for years, waiting for the perfect pitch. He doesn't swing at every opportunity that comes his way. He waits for the one he knows he can hit out of the park. It's a testament to his belief that stock market is a device for transferring money from the impatient to the patient. This is all wrapped up in his most quoted aphorism: price is what you pay. Value is what you get. He is a bargain hunter at heart, but not for cheap things. He hunts for value, for quality businesses that are temporarily on sale due to market fear or neglect. Warren Buffett's story is more than just a manual on investing. It's a testament to the power of a different kind of ambition, one rooted not in speed or disruption, but in wisdom, patience, and an unshakable faith in the enduring value of good businesses. He is not just an investor. He is a master of capital, a leader of leaders, and a philanthropist who has pledged to give away his fortune. From a young boy selling gum on the streets of Omaha, he used the simple, powerful tools of cash flow compounding and common sense to build one of the largest and most admired corporations in the world forever, proving that in the land of opportunity, the steadiest hand can often build the most enduring legacy.